The government is anticipating the risks of a capital outflow if the U.S. Federal Reserve raises its benchmark interest rates and drops its stimulus. Such policies will have an impact on Indonesia's foreign debt.
Although the U.S. Federal Reserve has postponed raising its interest rate, the Indonesian government still has to anticipate the moment the rate increase takes place. A stronger U.S. economy will stimulate investment in the U.S. financial market, drawing much-needed capital out of the emerging economies. Another impact of the U.S. move to raise its rates is that the burden of offshore borrowing will also increase in Indonesia, especially in view of the government's reliance on foreign investment. Finance Minister Khatib Basri stressed that there were two mechanisms the government could use to anticipate these. One is by pushing down the need for financing, such as by lowering the budget deficit, and the second is by diversifying the sources of financing.
So somehow, the second issue, besides reducing or lowering the budget deficit, is also diversify the source of financing. Because if we rely too much on the foreign holders, if there is a risk of the capital outflow, then the possibility of the reverse capital flow will be there.
Meanwhile, Harvard economist Carmen Reinhardt deems that the Indonesian economy has the opportunity to grow in the positive territory in the midterm. Reinhardt said that there were a number of aspects that were capable of supporting economic growth, but she also added that the next government will need to be able to reduce the potential of weak growth. She cited the deficit in the balance of payments and foreign debt.
While the prospects for emerging market and for Indonesia in particular over the medium term are very, very positive indeed. Advanced economies have aging populations. They have structural issues that they have not yet resolved. Debt overhangs may take decades, not years, to resolve. Emerging markets look really strong in Indonesia, in particular over the longer haul. But over the medium term, over the next couple of years, prepare for rocking waters.
The global uncertainty is pushing up the risk factors for government debts, especially offshore ones. And it looks like the government will see the value of its foreign borrowing rise in line with the U.S. Federal Reserve's increased interest rates.
But Westpac's James Shug wasn't surprised.